Well, let's return now to our reaction and our analysis of the medium-term budget policy statement delivered today by the Finance Minister Enoch Godongwana. Razia is the Managing Director and Chief Economist for Africa and the Middle East and Global Research at Standard Chartered Bank. She's in London. Razia, good afternoon to you. To look at the beginning of the speech, to look at the end of the speech is the same call for proper economic reform, structural reform. Does the middle of the speech give us any hope that there will actually be proper reform in the future?
Well, first off, the market reaction to this was positive, and that was largely because there had been concerns that whenever there is a windfall revenue emanating from what's been happening in mining, there might be the temptation to treat that as permanent. There were concerns that maybe there would be big increases in spending when South Africa hasn't yet properly consolidated its fiscal outlook. That is, it's still running a very substantial deficit. The markets were taking a more positive view of things, partly because of this relief. But if you looked at the overall story coming out of the medium-term budget, we know that growth, apart from the boom that we had seen, relative boom that we had seen in the current year, or will see in the current year, growth is likely to be weak medium-term. And while the debt ratios change, the public debt path is not expected to be as worrying as outlined earlier. This is largely because of the technical factor, because of the recent rebasing of GDP. In the medium term, debt still continues to grow, so the big picture challenges for South Africa are still very much in place. To your question about does this leave open the path for reform, the room for reform, it remains all important, because as much as we've seen a knee-jerk positive reaction to the medium-term budget from markets today, everyone will recognize that those bigger issues, the bigger challenges for the South African economy very much remain in place. And if there isn't the adoption of much more significant reform, if there isn't something that really sees an acceleration in the growth rate, then the concerns around South Africa's indebtedness and the limits that that imposes on policy choices in the future, those concerns do not go away.
In the meantime, Razia, pressure for a basic income grant for increased social spending is going to grow. The Education Department took a hit this year. Its budget was cut because of COVID. Even spending on police, we know crime's a big issue in our society, that was cut. I mean, the pressure on the minister is going to grow, and as you say, we still aren't seeing enough, reform. We certainly aren't seeing enough electricity on the grid, for example.
This is the basic issue. For as long as the growth outlook for South Africa remains as constrained as many currently imagine it to be, it's going to be very difficult to have many options for what to do with policy. We all know that there are key spending priorities. In an ideal world, it would be great if social spending could be ramped up on a more permanent basis, but affordability is still very much an issue. So credit to the Treasury, credit for coming out with a medium-term budget policy statement that has broadly met with market approval. The borrowing strategy is likely to be something that helps to keep debt service costs contained. And at this point, it's all important. There needs to be a broader understanding, though, that unless we see a more significant acceleration in underlying economic growth, some of the ideals, some of the nice-to-haves that would have a big development impact are just not within reach.
Razia, thank you very much indeed for your time. Managing Director, Chief Economist for Africa and Middle East Global Research at Standard Chartered Bank.